Apollo Hospitals is the top Nifty gainer, up 7% after strong first quarter numbers beat expectations. The management also tells CNBC-TV18 that they are also on track to add 500 beds in 4 new hospitals by the end of FY26.
And Hindalco surges in trade on the back of a good showing in the first quarter, where copper as well as aluminium business beat estimates. The managing director, Satish Pai, will join in shortly to discuss the first quarter's numbers.
Paytm rallies as the RBI withdraws merchant onboarding restrictions which were in place since November 2022. Brokerages Citi and Bernstein also issue bullish calls on the stock.
Wellness and beauty brands Nykaa and Honasa consumers surge on strong showing in the first quarter. Both companies register strong volume growth. Honasa's margin also improves, while Nykaa's beauty business registers strong growth.
Landmark Cars too delivers strong revenue growth in the first quarter, driven by new fast-growing brands. The stock higher by 6%.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam, and the markets have made a good start. We're up 100 points in the first hour of trade itself, but yesterday around this time is when the markets lost its way. One notable underperformer is the Nifty Bank. It's been underperforming for the last few trading sessions, and it continues to do that as of now. So the markets need to scale higher. The Nifty Bank needs to find its form. Hey, Mangalam.
Take that point on the frontline index, Nigel. You know, yesterday's high would be an extremely crucial mark to watch out for on the way up. But the good part about today's trading session as against yesterday is the advance decline is far more in favor of advances than decliners in yesterday's trading session. Towards the end, we saw both the red and green lines come very close to each other. Today, they've maintained that distance. It looks like it is a railway track with the green one being much above. So parallel, almost 1,700 stocks in the green for about 900 stocks which are in the red. Indian hotels, a notable gainer over the last few minutes, currently at the high point of trade. And we are seeing some traction in names like Aarti Industries, Strides Pharma and Uno Minda as well, which has just spiked in the last 10 minutes or so. So Uno Minda also comes up for you on the screen. The first conversation on the show today we have lined up for you is with All Cargo Logistics. The company witnessed weak operational performance in its June quarter. Profitability was impacted by forex loss and overall revenues were fairly subdued as well. Not unperturbed out here by this because the street was already prepared for that. The stock is down 5%, but remember Ravi Jakhar, who's the Director, Strategy and Group CFO, had told us earlier that the next couple of quarters would be subdued given the sort of problems that we are seeing internationally. Ravi, thank you so much for joining in. Now that the next couple of quarters have been subdued as you had promised a couple of quarters ago, do you see signs of improvement? If yes, then what's the kind of volume growth you are likely to see in both your domestic and international business? And if you could break that up into less than container load and full container load volumes for this year?
Yeah, thanks. It's always a pleasure to be on your show. And, talking about the business performance, we have two parts to it, the domestic side and the international side. On the domestic side, there are no problems on the macroeconomic front. The country has been doing well. The trade has been going up. And as an outcome of that, if you look at our numbers closely, we have reported a 50% increase in revenue year on year for our contract logistics business, and which is also translated into almost 30% increase year on year in the EBITDA. For the contract logistics business. Express business has also seen about 18% increase in EBITDA over the last quarter. So on the domestic side, businesses have a good momentum. And particularly on the express logistics, I would say we are seeing that the business is picking up traction now. We had kind of changed the management team about a quarter or maybe about 4 months ago. And we are seeing a good outcome of that. In the months to follow, you would see that positive momentum reflect in the revenue growth as well, which has been kind of muted if you see the last 2-3 quarters. So contract logistics business has been doing fantastic throughout last few years and remains on the same trend. Express logistics also picking steam. On the international business side, while the company-specific initiatives have all been good, the macroeconomic environment, as I indicated, has been quite challenging. Now, if you look at the coming quarter, this is a quarter which leads to festive demand. People are shopping for Christmas, and before they start shopping, inventories are stocked up. So as an outcome of that, you would see a stronger quarter July to September. But I would say that, even a stronger performance in July to September does not necessarily warrant a continued momentum. For the continued momentum, we need the geopolitical instability, the entire tariff conversations to stabilize And that's something which we would know in the coming 2-3 months. We have these 90-day and 60-day deadlines with various countries. So I would say, in short, the next quarter is going to be good for the international supply chain, primarily driven by the festive demand. You could see, up to 8 to 10% higher volumes quarter on quarter, which would significantly impact the profits as well. But for that momentum to sustain and profits to really grow, we would need to see more certainty on the global geopolitical environment and
All right.
the whole, tariff discussions.
Yes, this entire tariff tantrum has put the entire globe into a bit of a tizzy, so it becomes a little bit difficult. But you mentioned that number 8 to 10%. That's the volume growth you're like to see in both LCL as well as FCL. Is that the number you've given us?
Yes, that's the broad number for this quarter. On the back of
that's quarter on quarter for the second quarter, right?
Yeah, that's right. Yeah,
and
quarter over June quarter.
For the year, what should it look like then?
Like I said, in the current environment, we have seen like weekly changes. There was a week in which, for 2 consecutive weeks, the China-US trade dropped by like 80%. And the next week, which was up like 3 times, right? We have seen in the recent times our Brazil to US trade had, significant downtrend. So, the patterns are so volatile. It is difficult to predict beyond weeks. But as of now, as we look into, July and August and bit into September demand as well, these 3 months looks good. And therefore, like I said, we should see an 8 to 10% momentum on the volume uptick on the back of the festive demand.
All right. You have near-term views, but nothing to do with the long-term because uncertainty is still underway right now. What about margins? EBITDA ex Forex in your international supply chain division was down from 2.5% to 1.6%. It's a business where you anyway have wafer-thin margins. And on top of that, there is, the Forex element, there is this international geopolitical uncertainty, etc. What is a sustainable margin run rate that we can expect in a business like this?
Yeah, so as far as the Forex part is concerned, that is notional. Let me explain to you very quickly. What happens is that, we have our main global holding company in Belgium, which reports in euro, and it gives intercompany loans in US dollars. And they need to be valued, quarter on quarter because of the accounting standards. Now, if you see the long term, over the last 5 years, euro to USD has only changed by like 1.8 or 2%. But this was an extreme quarter where it changed by almost 9%. At the same time, we're also reviewing if we can change some of the accounting policies to eliminate these notional gains or losses because, they create unnecessary fluctuations in the reported earnings. So we're also evaluating that. Having said that, from a business standpoint, you may recall that our gross profits are largely dependent on the volumes. And if you see the recent trends, are actually gross profits have gone up. Margins may not be the real indicator because revenue may go up or down based on the freight rates. But if you look at even this quarter, the margins have actually gone up. The gross profit has actually gone up. And that is not driven necessarily by the business performance. A part of that is also because our local charges that we earn in European countries have also gone up as the euro became stronger. But corresponding to that, the staff costs and the administrative costs in Europe also went up. So you see slightly higher gross profit than what should have been normally reported. You see slightly higher SG&A costs. And therefore, the impact on the EBITDA from the euro perspective is neutral. There have been some, variable annual pay outs, etc. But from a long-term perspective, I believe that we can, look at 6 to 8% growth in volumes, which should compound into an equal growth in gross profit. That's what our estimation is based on assuming some settlement on the whole tariff debate and the trade normalizing a bit. And with that, translating into GP, SG&A remaining flat, we believe that could have a significant operating leverage on the profits. And that's what is the broad strategy we are working on, trying to retain the costs at the current levels. There could be some one-off, movements here or there on account of annual payouts, but largely, I would say we're not focused on quarter to quarter at this point in time. It could still be a couple of quarters of reorganizing, outsourcing, trying to see how we can rebalance our cost structures. But in the long term, if I look at the full year 2026, and we operate January to December on the international business, I would say we're reasonably confident that we are in control on the cost side, and some momentum on the macroeconomic environment should put us in the right spot. And on the domestic side, like I said, the business is already performing well.
All right, take that point, Ravi. Thank you so much for joining in. Wish you good luck. Hope to speak to you once things are better. But for now, the near-term visibility that you have is 8 to 10% volume growth in the second quarter. Take a short break. On the other side, we get chatting management of Hindalco post their first quarter earnings. Stock zooming in trade.
Welcome back. Well, a few stocks actually are moving quite well in today's trading session. Just pull up JM Financial. The stock is now locked. It's up closer on 10%. So big move is what we're seeing on that particular name. And volumes as well, very, very large. I think we should get the intraday chart on that name up for you on the screen. Another one that's moving well is Eternal. That's spiked up to the high point of the day. So good move is what we're seeing on that name. The one that's struggling actually today is Jupiter Wagons. Just take a look at that stock. It's moving lower, and from the word go itself, it's seeing some kind of selling. And the other big listing that we saw was Lotus. On the day of listing itself, it moved, I think the IPO price was 150 rupees. It went all the way to around 180 on day of listing, and in the consecutive days, it went all the way to around 220 rupees. But from there, actually, it's seen some kind of profit taking. We're talking about Lotus Developers, the real estate company that has presence here in Mumbai. I think the intraday chart should come up for you. Someone has suddenly pressed the exit button on that particular name. Lotus Developers should come up for you. And Jain Irrigation is another stock that's spiking up as well. At some point of time, some of these stocks should come up for you on the screen. Well, the other one that's doing well actually today is Hindalco. As we told you yesterday, the numbers were quite good. Though the problem is with regard to the Novelis business. Novelis business has been under some pressure. In fact, I spoke to the managing director, Mr. Satish Pai, and started off by asking him about the tariff impact in the second quarter on their Novelis business and how is demand shaping up. Let's listen in to what he had to say.
The point was about Novelis's quarter. So when I look at the Novelis business, a couple of things have started to be tailwinds. First, the scrap spreads in the US especially have started to improve, which will be in the second quarter and the second half of this year, a positive tailwind. Other steps that we are taking to reduce the cost, our structural cost adjustment program is actually going well ahead of its time. So I think the other part, as you also rightfully mentioned, the end markets are very strong. The can market actually grew by more than 10% year on year. So a combination of strong market demand, scrap spreads improving, as well as structural cost reductions that we have put in place, give us the confidence that Q2 will be more or less equal to Q1. And then in the second half of the year, the steps that we have taken to bring back more production capacity to the US will help us deal with the tariff issue as well.
All right, Mr. Pai, but if tariffs stay at current levels, should we rule out you going to around $500 per ton in this fiscal year, or do you think there's still a possibility?
No, as I said, the remaining tariff issue for us really is the volume that comes from Canada. In the second half of the year, we will move that capacity through various measures we are taking into the US. So even if the tariffs stay in place, we believe that the second half of this year, we would have mitigated the tariff impact.
So $500 per ton is a possibility still, is what you believe. That's an aspiration.
We will be certainly moving towards that target.
All right, got that. So that's about the Novelis piece then. Let's come back to India. The aluminium business continues to stride ahead, and you're doing closer on $1,450 to around $1,500 per ton in the aluminium business. You have some quantity that's also hedged, but do you think that you can continue to hold on to these levels either in the absolute term of 4,300 crores or in a per ton basis? Is it sustainable, the India aluminium business?
I think that the fundamentals of our business in India are very strong. We run a very sound operation with good control on our cost. Operating efficiencies are running very well. So if the LME stays north of 2,500, which it is today, and the coal costs do not escalate, the Q2 will be slightly higher than Q1 because it's the monsoon season. But overall, I think that the current levels of profitability are sustainable. The big caveat I'm giving again is that LME should be north of 2,500.
All right. And what kind of LME prices you're working with? Since you have a lot of uncertainty with regard to Trump's tariffs, but the hope is that China as well will pepper their economy, which in turn could help metals on the whole. So what is the range we should work with?
So look, the very clear thing that is coming out is both aluminium and copper, the two metals that we are dealing with. Supply and demand is very tight, and the end market demand for aluminium and copper is also extremely strong. So if you can see now, both the metals, the prices are holding firm. So for LME, we are working, as I said, with a range of around $2,400 to $2,600 per ton.
Got it. Copper, in the past, you've said that we should be working at around 600 crores per quarter. But this quarter as well, you went ahead and surprised the street at around 670 crores. What's it? Would you like to up that guidance from 600 crores per quarter?
See, the copper business is a very varied value chain. So there are many moving parts that go up and down. So I think the 600 guidance was given so that there is a base to what you can expect since TCRCs have dropped. But it will be 600 to 600 plus is our feeling.
Okay. Despite undertaking a big capex at Novelis, your absolute debt number actually has cooled off. That was a pleasant surprise. Where is that number headed from here?
Yes, see, the Novelis debt numbers and the Novelis net debt to EBITDA, we have always guided in the next year or so as the Bay Minette project goes through its completion. The net debt to EBITDA will go up to about 3.5 and then start to come down. I think when you look at the consolidated balance sheet, the net debt to EBITDA is at 1 because in India, we are sitting on a net cash of around 11,000 crores. And the India business is generating a lot of cash. So hence, the consolidated balance sheet will remain very strong. And I think this year, our net debt to EBITDAs will be around 1.
Okay. All right. And what is the capex plan, sir, just to revise that you have laid out for this year and break it up between India as well as Novelis?
So in Novelis, it will be around 2 billion with the Bay Minette project that is ongoing. And in India, we are saying about 7,500 to 8,000 crores, so about $1 billion.
Okay, all right. Well, that's Mr. Pai sounding extremely optimistic on prospects of Hindalco from here on. For the India business, the aluminium EBITDA can hold around current levels provided aluminium holds above $2,500 per ton and coal prices are subdued. For copper, the EBITDA number should hover around $600 on a per quarter basis, while Novelis, he's calling out that the past quarter, there's a basing out process in terms of EBITDA, and things will improve, particularly in the second half of the year because of the cost focus that they are doing. And in fact, he believes that gradually that EBITDA per ton number for Novelis will start moving towards $500 per ton. So explains why the stock is doing quite well. It's a tailwind as well with regard to the Fed probably cutting rates in the month of September itself. Slip into a break, come back, continue our focus on markets. Don't go anywhere.
The last few minutes belong to the pharmaceutical space. Just look at Cipla. That's moved higher to the high point of trade. Giving it company at the higher end is Device Labs. And alongside that, we have Dr. Reddy's, which has moved higher as well. Sun Pharma, too, over the last few minutes has moved higher. So the entire pharmaceutical pack has seen a bit of a spike this weekend. There is that big meeting between Donald Trump and Putin. Let's see whether that yields any sort of improvement or certainty on the tariff side as well. Be that as it may, there are always ideas for profit. And this one comes in from our colleague at Money Control Pro. Sachin Pal joins in with the stock. Sachin.
Crompton Greaves Consumer Electricals delivered a muted financial performance in the first quarter of FY26 with a revenue decline of almost 7% on year-on-year. This was primarily attributed to the early arrival of the monsoon seasons, which really impacted the sales of its summer products in the quarter gone by. In the ECD segment, which contributes almost 75 to 80% of its revenues, the company witnessed a revenue decline of almost 8% year, primarily due to weak sales in fans and other summer-focused products. On the other hand, the solar pumps as well as the small domestic appliances continued strong momentum and witnessed a robust growth on a year-on-year basis. The other two business verticals, which is lighting vertical as well as the Butterfly Ganimati, which is the kitchen appliances vertical of the company, witnessed a stagnant growth in terms of top line year-on-year. The margins in both these verticals were stronger on a year-on-year basis, which really had a positive impact in terms of overall profitability of the company in the quarter gone by. In terms of the balance sheet, the company has achieved a net debt-free status and is currently running a cash positive account which really paves well for further expansions as well as market share gains. The company remains well positioned, and the quarter gone by has been primarily attributed to the weather disruptions, which is expected to normalize in the next 2 to 3 quarters. The company remains well positioned in terms of the growth revival, and the stock has also taken a beating, which factoring most of the negatives associated with the business at this point of time. It is currently trading at almost 33 times 1 year forward earnings, which we believe is very reasonable for accumulation from a long-term standpoint.
Sachin, thanks a lot for that. With that, we'll wrap up on this edition of Chartbusters with an all-green screen at the top of our heads. The Nifty Bank, mild underperformer, but still in green. Take it to the team of Trading Hour to hold the markets higher.